All right, and we are live back again, finally together with Captain Rational, the one and only, the most rational. I cannot say that I know anyone more rational than this captain right here. And yeah, we're ready to hit it. We're ready to talk macro. We are on Blockmates TV for the very first time. We've kind of been using the Blockmates channel for our streams previously, but they're expanding. They're moving things around. We are now Blockmates TV material, so we are going to live up to that standard. And
Need to promote it.
yeah, absolutely. Our buddies at Blockmates. So if you do not follow the Blockmates TV channel, now is the time to do so. Like, subscribe, all of that. Uh
Of all the content in
Definitely.
the crypto space, Blockmates is beyond reproach, above
Yes.
par,
Oh yeah.
exemplary.
Yes. They are not shilling the bags of the VCs for sure. Like, it's these guys, they work their butts off to bring like down deep in the crypto weeds material to the people. And I love it. And I love that they have made a place for something like this, uh, a show that is dedicated to the intersection of crypto and macro. And in general, on this show, we tend to focus on the macro, but we always bring it back. We always bring it back to uh, the crypto of at some point, because crypto is now a big enough asset class that it is part of the macro, and it is part of the euro dollar. It is part of the global monetary system. So GM to all those who are joining. We have a few. Please hit up the chat. Let us know you're
Yeah,
here.
throw some comments, throw some questions.
Yeah.
We do massive monologues. Obviously, folks know what I do. And
Yeah.
between the two of us, we're just ranting and raving about how
I,
insane the global economic system is. But your questions are important too. It gives us
yeah. And
focus,
and
guidance.
and it does. It helps us to, if there's a concept or something that we're talking about, that is going over your head, by all means. Like, the whole purpose of the show is not only just for us to rant about the goings on in the macro world. It's also to educate and to bring these ideas to people that have never been exposed to this stuff, because not everyone is a monetary plumbing nerd like I am, and the captain is. And so definitely, I think that it's important. Ask your questions. We will cover some stuff, though. There has been many happenings, so we're gonna hit the charts. We've only got an hour, so let's do this. Let me. Oops, that wasn't really the chart I wanted to start on. Although it's an interesting. Oops, I just pulled it off the stage. All right, we're doing it live. All right, let's look at the DXY. That seems like always a good place to start. So,
Actually, that's a great place.
yeah. So the DXY, for those that don't know, is the dollar index, and it is a basket of currencies, um, heavily weighted towards the euro and the yen, which are major trading partners of the United States and its dollar. And it's bounced. It has bounced, and it has bounced hard, and it looks like it wants to recapture that 115 level that it hit back in July of 22.
The most
And
important thing when you're looking at data like this, it's not the data, it's not the dollar, it's what the dollar is in the system. And when central banks around the world and politicians, they don't look at this shit. They're gen pop. Politicians are just
no,
boring people going to work. But it's when the economists are scared shitless and they go to Congress and they're like, guys, we got a problem. That's when the politicians freak out.
yes, 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 indeed. The politicians start freaking out when their advisors tell them to freak out, and, and they tell them why to freak out. Um, and that's why stuff always gets done. Once, like, you've got like people like Janet Yellen and stuff that she knows what's up, but like, as far as the Fed and the Treasury, she knows what's going on. But like once they start ringing the alarm bells, you know, that hey, this is not just about politics anymore. This is about US dollar hegemony, US soft power, which is what US dollar hegemony is all about. Um, I think that it's when that happens, all the politics get set aside and they figure it out. They pass the budget deal. There's a lot of haggling and a lot of game theory and brinksmanship, but at the end of the day, when it's between the choices between the US uh putting its reserve currency status in jeopardy and uh sorting out some political nonsense, they will choose the power every single time. After all, they're congressmen and congresswomen and
The complexity
politicians.
is the complexity is that how far can you go? And clearly they've been doing this for how many years? Those 75 at minimum. How many times can you hit the world over the head and say buy our bonds now? Or
Hmm.
we're just going to keep raising interest rates and we're going to collapse your global eurodollar system and you're all going to absolutely go to the bottomless pit of economic hell. And so that chart, the DXY, is basically an expression of international capitulation because
Yeah,
obviously euro yen is weighted. Uh, Everything else has currency pairs with euro and yen. So as this goes up, basically the whole world is put in a vice grip. So
yeah,
this goes the only, and then the whole conversation of how does this mechanically even go down ever, considering the global economic construct, and how much pressure can the U.S. put before they are forced to capitulate? Because if it keeps going up, you no longer have foreign currencies, and then the U.S. has no capacity to import because countries around the world are capitulating.
yeah. They dollarize eventually. Uh, but the problem, the real problem that is the ultimate, like if you want to trace back dollar hegemony to a moment, you trace it back to Bretton Woods, at least in my mind. You trace it back to Bretton Woods. Take yourself back to after World War II, like the world was in shambles. All the production capacity of the world was in shambles, and we had just spent, the last few years building all of the war materials for the war, for a long time before we even got into the war. And the same thing happened at World War One. We didn't get into World War One until the very end, after we had spent time building everybody else's war materials. And so between those two wars that took place not that far apart, um, we managed to amount an incredible amount of the world's supply of gold. And at the time, we were on a gold standard. And so what happened is we had to basically at Bretton Woods, we made the choice that, hey, we're going to, lend a bunch of money to Europe, basically creating dollar denominated liabilities overseas. And in doing so, we created demand for dollars and for our goods. And so we did that, but then people started using dollar liabilities as not only it's not just a currency, it is a denomination, right?
Yeah, yeah.
And so if the Saudis start selling oil and then depositing their dollars into foreign banks, those banks have to then take something and buy something denominated in dollars with it, or make a or actually, I mean, they have to make a loan denominated in dollars in order to create an asset to balance their balance sheet. And so what happens is you get this offshore dollar system created. And what has happened since World War II is the amount of dollars outside the US has just grown and grown and grown and grown and grown and grown. The amount of dollars inside the US has not grown at the same pace. And so what
And
happens is this external system that we created, this monster that we have created, keeps getting bigger and bigger and bigger and more out of our control. And what happens is every now and then it blows up. And when it blows up, it looks like this. It goes boom. As we take all, we print a bunch of money at the Fed. In other words, the Fed buys a bunch of assets to keep all of the collateral markets overseas that keep that dollar hegemony running. They print that money to make those markets liquid, and they will do that at all costs. And
the
so
takeaway I have about US printing, it's not printing. It was already printed a long time ago. So when
exactly.
the US prints at an M0 level, they are deleveraging the system because they are
Yes.
providing more of the base unit for what has
Right.
already been a liability has already been created for.
Right. Right. Exactly. These dollars were outside. These were already printed. They were outside the visible spectrum. And now, boom, all of a sudden you can see them. You go, well, the Fed just printed a bunch of money. No, 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 no. The
We don't use
private
that money.
system overseas printed this money and just about broke the dollar system. And so they had to make more dollars because, and this is the problem with the way that the dollar system is set up, is that we can put all these regulations and controls domestically over the system and pretend like the dollar is something that is confined to our borders, but it's a global dollar system. And to us, a dollar is a unit of currency. By us, I mean the US. It's a currency. To everyone else, it's a denomination. And there's a very important distinction to be made there between a currency and a denomination, because you can control a currency. The Fed can control the amount of dollars and liabilities that are on their balance sheet. What they can't control is the amount of liabilities that exist outside of their jurisdiction. And
Claims on
so
dollar units.
exactly. And so, we've spent why do we do these bailouts? Well, because if we don't, then you lose the dollar hegemony. And
Not necessarily. It's worse than that. If you don't do these bailouts, foreign currencies become worthless, and it takes what, a decade, 15, 20 years for foreign countries to redenominate their entire financial system into dollars, and so that's a non-starter. And there goes the entire manufacturing base in foreign countries. Uh, you lose the imports if they don't do so. When the U.S. does what it's done and to prop up the global system, you lose the imports if they don't do that, and then
Yeah.
the
Well,
U.S. has
or
domestic problems.
and you're assuming that when this all blows up, they're going to convert to something else that they're going to convert $2. But it's entirely possible that they will just give up on the dollar entirely and try again with something else. And I think that the US, especially like since the 70s with the creation of Swift, they have enjoyed the soft power that comes from controlling the rails of finance and the flows. They have Fedwire, they have uh you know the DTCC, they have all these various tools in their pocket that they can use to, well, actually DTC is a little different, but the they have Fedwire, they have Swift, and they can use these as tools to uh, spread the dollar and to keep this system afloat so that they have control over parts of it as best they can. That's what
See, the
swap lines
thing,
are.
I don't.
It's
It's not keep the system afloat like it's in our control. It's not. It's still opt-in. What do I mean by that? I mean debt implies a lender, and a lender wants to get repaid because they have liabilities in the same denomination in which they lent. If I lend someone $1 billion and Joe says, here's a bunch of gold, I'm like, no, dude, I lent you dollars. I owe someone that money. Give me my
yeah,
damn dollars. So they are satisfying this international demand to keep it functional because it is demanded to be functional. You know, this is why I talk so much about a federation from a cryptocurrency perspective. This is all opt-in. As much as people can be very salty and angry about what they've opted into, and that's basically the global situation. But this is their choice, and they still continue to opt into the dollar accounting system by choice because they can't opt out. You could call it an addiction, but you could call it momentum entrenchment. They are a participant in the system in which they created, and you cannot. It's not that you just can't easily opt out of it. You cannot mechanically opt out of it because you owe in it. You you are entrenched, and that momentum. Sure, this plays into the whole time horizon calculation on when this system is going to change to another reserve and the whole BRICS currency conversation. Yeah, that's cool. I don't want to use the dollar either. I've got to go to Publix. I got to get some food. I could use the dollar. Why? Because they're charging me in the dollar. The whole system doesn't change from the dollar until everyone stops denominating their products and services in dollars. Check back in 20 years.
yeah. I mean, and that's the thing. And somebody brought up on your Twitter, and maybe we can show this one. Uh, is the Japanese yen a runaway train to oblivion? How can the U.S. prop up Japan, Ukraine, Israel, and keep the U.S. out of recession?
One
I
question at a time. First one. Yeah,
so
hit it. Go, Ben. Hit the
is
first one.
Japan's yen a runaway train to oblivion? I mean, yes. However, I I think that there are too many people that like to put things into it's very easy to oversimplify things when it comes to global politics and monetary policy and fiscal policy because they're all one and the same. They are all tools in the toolbox. And yeah, Japan is in a bad, bad spot right now. And the Treasury, US Treasury, uh, wants Japan as an ally, especially with China rattling sabers with regard to, you know,
Taiwan
that part of the world, like,
alignment with
the
Russia.
South China Sea, the Philippines, Taiwan, all of it. They're rattling sabers. They want uh, to establish naval control over that area.
Japan is
And
literally like it. You put base, you have bases in Japan. You're like, oh, you're in China. It's like it's like Cuba. It's like right there.
it
Same with
is, it
Taiwan.
is, it is right there. And strategically, right now, and geopolitically, they are a very important partner to the U.S. uh to counter some of that. And so part of this comes back to like, why is the Fed keeping rates so high? Because there are a lot of indicators, especially globally, that are rolling over. You seeing these currencies like, I mean, uh well, there's some manipulation right there. But like seeing different like currencies react to what has gone on with the the rising of the dollar. Like the euro is back down, falling back towards, parity with the dollar. Um
Personnel is like 94 shortly ago. How about that?
yeah, well, that was October 22. Yeah. And yeah, the Australian dollar not looking so hot. And here's the thing: who is one of the Australian dollar's biggest trading partners?
Japan,
China.
China.
I mean, I'm sure they do a lot of trading with Japan too. I don't actually know those numbers off the top of my head, but um, and if you were China and trying like hell to prop up your currency, uh, what would you do? You would sell off your Australian dollar, because the Australian dollar is probably, what is it, the fourth fourth biggest reserve currency in the world, because I think it's the U.S. dollar, Canadian dollar, yen, or euro, yen. Okay, maybe it's the fifth, but those are the big ones. Those are the big ones, and China and Australia are very, very close. And lately, they have not really been getting along geopolitically as well, because if there's anybody who has always stepped up and done whatever the U.S. has asked of them, it's Australia. And so, again, a strategic partner in that part of the world that you're trying to bottle in. We have naval bases there. We have naval bases in Japan. Like, if you're trying to geopolitically bottle in that area of the world and keep Chinese naval power at bay, you're going to
That's a
to
good
need
spot.
those people. And so, because China is like the manufacturing hub of the world, uh,
Still.
it still is.
And they're
Um,
trying to export so what happens is it's quite fascinating and you see it very obviously in automobiles with how they're exporting these very highly technical yet extremely cheap vehicles. They're trying to export their deflation because they're trying to create inflation domestically to cure their not just recession. It's basically a deflationary implosion inside of their country with their real estate collapse. And you do that by spending a lot of money domestically, inflating the currency, devaluing the currency as best they can without affecting cross currency pairs. And that allows domestic manufacturing to produce extremely cheap goods and services. And then they're able to export that to the rest of the world. And that's exactly why we hear about tariffs in the US against very highly technical yet cheap automobiles. Uh, and so that exportation of deflation is how they cure deflation domestically. They're exporting it.
Right. But if exports start drying up because global demand dries up, then you get a shortage uh, of your ability to do that. Like, I mean, I think China is very exposed to Japan. And I think that is part of what is going on with the Fed and why they've kept rates as high as they have is because it's not because they want to hurt Japan. It's not
Mm.
because they want to create a the flows that go from low interest rates to high interest rates, which is Japan has always historically. Let me pull up their stuff. Let's see. So look at like the rates in Japan. Like these are much lower interest rates than what we are accustomed to currently in the U.S. Like look at this yield curve. We are propping up this short end. 5.24% yield on 1 month treasuries. Like the
Mechanically, you can't.
sucking we have been sucking the US dollars out of the global dollar system. Uh at least trying by way of this tool to create flows into treasuries. Uh and the problem is that comes at the expense
Of
of
everything.
everything. And we're doing our best to limit the damage to the people we like.
Do you
As
think, is it mechanically, do you, I don't believe in domestic agenda, meaning Fed argument is consumer price inflation. Now, whether that's like heading down the road of conspiratorial, I really shy away from that type of thought. But that's it. It's either domestic agenda or international geopolitical agenda. Um, which is it? Are they actually
I think
trying?
there are so many agendas. The
Mhm.
Fed of on the officially the Fed has two mandates, and it's stable employment and stable currency.
But is it,
And
or is it just geopolitical?
well, and that's the thing is there are many examples in the past of when the Fed bailed out the Treasury following World War II. They had to basically implement yield curve control, and that was in order to help out the Treasury and make sure that the U.S. could fund the war effort that they had just spent a lot of money on. And if that isn't if that right there isn't a perfect example of the fact that we don't have just two agendas. And then they've talked about like you know this ESG stuff and like all sorts of dumb stuff, but like I think all that's just a distraction from the fact that like you have a former Fed chair in the seat at the Treasury. Like, if that doesn't tell you that Fed independence is not really a thing,
Smoke and
I don't know
mirrors.
what would. Um, so somebody asked, like, going back to that question, right? Like, is the Japanese yen a runaway train to oblivion? Um, I think to some extent, all of these currencies are going to blow up eventually. Japan has friends in high places, and we're gonna do it we can. And when I say we, I'm not saying like I am like condoning any of this. I'm just kind of speaking as somebody from the US. Like the US is going to do what it can to protect its interests and its allies. Um and so Can it get batted back down? There are probably ways, yes.
Yeah.
There are all sorts of tools. Central banks all over the world coordinate with one another. They have the ability to change whatever their reserves are. So, uh, they could. The U.S. maybe the U.S. is dumping their Australian dollars in order to get the yen under control. Maybe it's Japan that's dumping their uh you know Australian dollars in order to get the yen under control. Like,
Who's going to buy the yen? This needs to go on balance sheets. It needs to go quick. The only reason this isn't going up fast, well, frankly, look how fast this is going up. This is 159. It's 167. This every tick this goes up, something is getting more expensive on the shelves in Japan. Uh, th- This uh, this is bailout territory for an entire country because at
yeah,
some point the inflate domestic inflation that chart is causing degrades the actual functioning of the economy to the point where it gets critical and and it's not just the bankers, it's the politicians. They're saying not what can you do, it's if you don't do this, these companies are shutting down and food services are shutting down and these banks are not only the banks are no longer solvent, but literally the flow and economic function of the country ceases, and then that's where it's heading. It is a runaway chain in that direction,
yeah.
and
And not to mention the demographics. Like, the demographics of Japan uh are god awful. Like, not quite as bad as China. Um China's even worse. They have half, like, China has half as many 5-year-olds as 10-year-olds. Like, think about what kind of collapse awaits them when they their population is just aging out at like an almost exponential rate of the workforce. Um their only hope is technology to try to keep up that production center, because they sure aren't going to be able to do it by way of, like, people. Like, that was always the big selling feature for China. It's like, look at all the people we have. But
yeah,
if
so
it
yeah.
and so all these countries with falling demographics have a big problem on their hands, because there's all of these dollar liabilities, and the amount of dollar liabilities per capita, just globally, the amount of dollar liabilities per capita is up only. It is up only. And so, what do you suppose is going to happen to this? It's inevitable that the Fed balance sheet is going to have to expand in order to maintain all of the social programs and all of the various things that have been promised to people, not only in the US, but all around the world. And as you have fewer and fewer and fewer people to pay for said programs, um, there's going to be a lot of write-offs, a lot of damage, a lot of deflation along the way. And aren't Japan offering a breeding visa?
I,
Uh,
I think I think
I
that's
don't.
very tongue in cheek, but why not?
I mean, you can, sure. I don't. I think Turkey tried that a while back. It wasn't terribly successful. I think these countries are getting desperate, right? But the problem is, like, at the end of the day, um, you can try to incentivize people to procreate to help with your demographic issues, but you're doing it in a world in which things are getting more expensive. every day. And so you have to, if you're going to go that route, you need to throw a lot of money at that and basically make it so that, hey, you're not going to pay for anything as long as you have, like, I think I just saw some country, I forget which one it
Four
was.
kids, no taxes.
Yeah, as long as, I think it was Bulgaria or something. Yeah, as long as you have like 4 kids, they're like, you don't pay income tax for the rest of your life. Now, that's a deal. I mean, but then again, how are you going to pay your dollar liabilities if that works? Um, because you've got an 18-year span at least, unless you're really into child labor, before those are productive members of society. Like, you've got to have some runway to be able to deal with dollar liabilities in the meantime. And honestly, the way that dollar liabilities are growing overseas, uh, I don't know that there's 20 years of runway for any of these countries.
Demographics doesn't get solved with the population anymore. It's going to be robotics, and it's going to be quick. And what does quick mean? What is these time horizons? The hardest part of investing is time horizons. And quick means probably 5, 10 years. You'll see a massive ramp up of productivity from a robotic standpoint. AI changes everything from an information technology standpoint, and that is a huge amount of labor, a huge amount of resources from a human perspective that are no longer needed. It changes the whole composition of society. It's the only cure for demographic decay in the short term, and short term being 5 to 10 years. Well, look at
It is.
Hogarth's.
It is, but it doesn't change the fact that you're still going to have to. There's still a lot of political promises that have been made to a lot of parties that ultimately, you've always said that, civil volatility or whatever. What's your saying about the
At some point, civil
civility
unrest.
will be financed?
Exactly. And that's uh,
Yeah.
that's the Hogarth's point. All this plays into what Raoul talks about. All the numbers get nominally adjusted, the denominator changes, and they try to account from it from a political optics standpoint. But that's meaning how do you accommodate higher prices of things, higher salaries, but higher salaries begets higher prices of things because more people could afford things, and it encourages or sustains the supply demand imbalance. Um, so everything is very cyclical. Everything is a self-sustaining feedback loop, and it's all about directionality. And this directionality is quite scary, and it's best expressed in the change in 10-year interest rates. This could be a very different system than anyone alive, almost anyone alive today has ever seen. And
Yeah.
that's probably what we're talking about in many regards. We're trying to start, everything we're talking about, Ben, is discussing a structural change in the system. And the 10 year shows that better than anything.
Yeah.
Since 1981. Anything
So
before 1981, that after anyone that wasn't like 20 years old in 1981 has no capacity to understand what it was like before. So if you were born after 1981, the world will be a very weird place going forward. Yeah, me too.
yeah. Um so back to this question about the yen, like, how can the US prop up Japan? And I think that they are doing a number of things. And another one that I neglected to mention was the Treasury announced a buyback a while back where they were going to buy back what are called off the run securities. Um, and basically, the whole point of this program is to try to keep liquidity in the Treasury market. Because if there is one market in the world that is important to the dollar, it is this one right here. This is
Well,
the volatility measurement of US Treasuries. And
this is the crypto chart. This one chart is an expression of everything anyone ever needs to understand about the directionality of cryptocurrency prices. I love that. I mean, it's literally obviously it's risk asset prices in general, but as everyone understands, what is the asset class that responds most sharply to change in currency supply? Crypto. This is
Yep.
crypto. It's crazy.
I mean, so the whole point, though, getting back to the Japan question of suppressing like this volatility is basically what the Treasury is doing is they are doing active buyback programs. Because you can think of treasuries as being like when they're first issued, it's like it doesn't matter what you've ever traded. Like a new sneaker comes out, like a new whatever collectible thing comes out. You buy it. There's a lot of them. Then all of a sudden, over time, as they get snatched up, sometimes like if it is truly in demand, as the U.S. Treasury is as an a U.S. asset that's denominated in dollars that you can lend against to create more dollars, it is what makes the world go round, quite literally. Um, can't get in more in demand than that. um, what they've been doing is they've been buying these off the run ones, which are these ones that are trading at a higher price because they just aren't as liquid. Because the whole appeal of the U.S. Treasury market is that it is the deepest, most liquid market in the world, and this right here is the measurement of how liquid the U.S. Treasury market is. And
When I see this chart, all I see is an Ave health factor, where it's just an over collateralization ratio. I mean, obviously it applies to tapioca as well. As when you're borrowing, and it's if you got something going up and down 30, 40, 50% a day, you're like, oh, I'm not going to borrow so much. But if you got
right, right,
5%
because you
volatility for 5 years,
you apply a haircut. Although, but if it's the deepest, most liquid market in the world, which I mean, a lot of this stuff is treated like cash. Like T bills are treated like cash until they're not, and then things blow up, and then that balance sheet gets bigger, and QE happens, and that has been the way things have happened over the last several decades. But getting back to the point, they are buying back the illiquid stuff and replacing it with fresh new stuff. And they're capturing a spread. I mean, it does help the US Treasury help finance its deficit in that they're selling because there is a certain amount of liquidity premium for those older assets. Because they're not as liquid, they trade special, which is the repo term for what what happens there. They trade special, which means that they have extra. Uh, they cost. They're worth less. They're worth less than ones that are super liquid because they're just not as useful. And so the Treasury can buy those back on the cheap, and they can issue new ones, and they can capture the spread while trying to keep this market liquid. So the Treasury started this buying program, uh, coincidentally in what was it May of 24. So uh, that is one of the tools that they I think are using in order to help to keep Japan liquid as well, is they are making it so that I don't know whose treasuries they're buying. you know, they
oh,
might be buying their friends' treasuries. Like I don't know. Um,
that's an interesting one. As
yes,
so there's two components to the overall structure of the system. Obviously, the spreads in currency, which are affected by interest rates. So whether Japan is a runaway train or not from a currency spread perspective is independent from the move and the volatility of collateral. Collateral and currency is the financial system of the world. If the volatility collapses, so the Treasury's buyback program is a component to improve the overall smooth market function of global Treasury action. If the liquidity is increasing, the volatility collapses, and that allows the world to use the collateral to expand the global currency system. That is separate and apart from these damn spreads. They got a whole lot of shit that they're trying to manage.
Yeah. I mean, and I think that you're not going to see this thing just blow up without it getting batted back down, just like it was in October of 22 when it first tapped this 150 level. Like, it got batted back down through coordinated efforts of central banks. They're not, and then again, it hit it again in October of 23, batted it back down. It popped back up like a balloon underwater. And yeah, I think its general trend is up, and the general trend is going to remain up because as an as a as a state, you need to maintain a currency, you need to maintain inflows and outflows, and you need to maintain your bonds, right? And you can't control all of them at once. So right now, they're trying to keep a wrap on the currency, but at the same time, they realize that, they can't do negative interest rates anymore. Here's Japan's rates. Japan's rates are moving just the same. Like, they are going up, up, up in order to try to attract more liquidity into their system to buy those yen.
But half's not going to do it.
It's
They need 4 or 5.
they need 10 because but the thing is, their debt to GDP ratio is like on the order of like 300.
How the
Uh
hell they manage that? They can't do it.
well, their central bank puts it all on their balance sheet and manages it. So it Japan is going to be real interesting because they were the inventors of QE. They are further down this road than we are. And the
What,
difference is
the
that
80s?
they are not they are not the reserve currency of the world. But um, whatever they're doing is kind of not working anymore. Like, they have managed to manipulate this currency for as long as possible in the correct direction. Um, but what they need, honestly, is exports, get dollars, swap them for yen. That is
Yeah,
what
they're
they
not
need
going
to
to.
do.
How are they going to do the exports with demographic collapse unless they are at the
Well,
forefront of robotics?
and and how
Oh,
are they going to do that with oil prices going up denominated in dollars? Because after all, the world runs on people and oil. And if you don't have people or oil or both, you're going to have a
well,
bad time.
it takes too long to build out nuclear. They have no short-term solutions. I'm no
Well, and
geopolitical.
they've been opposed to nuclear ever since Fukushima. I think they're starting to finally turn around on that. Um, they had a very poor nuclear culture over there. Um, and so, they got very scared of nuclear for a while. But honestly, for energy independence purposes, it is the only viable option. There's no big oil reserves in Japan.
As Luke talks about, maybe a breakthrough in fusion. I mean, literally, that would change everything so dramatically if there was a breakthrough in fusion. But look at in Japan, this currency would go to the moon just from investment standpoint. Because if you had infinite energy, there goes robotics would blow up over there. It would be wild with their technological capacity.
Yep. Yep.
work ethic.
Here's another interesting chart. This is the spread between the Italian and the German Bund 10-year, and it
High or low?
well, it tends to peak and it hit this line in times of low dollar liquidity. March of 20, September of 22, October 23. And I think we're starting to see the sprouting of some dollar liquidity issues once again. As the global system gets starved of dollars because uh the liabilities have grown, but the inflows and the production of the capacity of these the rest of the world just have not kept up. And as you see, I mean, you're starting to see it with real estate prices in the US too. Like there are deflationary pressures that are building because that's what happens when you don't have enough dollars to meet your liabilities. You get deflation, you get
You get
markdowns,
recession.
you get things marked to market. And I think that is one of the things that like has made uh the the charts for the US everything to look so parabolic is just that like modern accounting allows for things to be just not marked to market. And that is one of the things that I love about crypto is that like if you have a dollar stable coin, it is marked to market. All of
Real
the
time, block
assets
by block.
are marked to market. If not block by block, it's at least Oracle update by Oracle update.
Yep.
But there is a running price for all of these assets. Now, less liquid assets. Obviously, the oracles don't update as quickly, and so I don't think that we're necessarily immune to this because at the end of the day, I've always said about decentralized finance that it's just finance, but on a different rail. Like we're not making new we're not inventing new kinds of finance really. Like all of this has been made before. It's just slowly programming it and putting it on chain and making it into its own rail that is aside from this other system.
You certainly
And
still get the liquidation cascades. We've
you
seen our
certainly do.
fair
Well,
share.
and that happens too. Like I mean, that happen. That's not a new thing either. And like I said, you're seeing that um, just at a much slower pace with like commercial real estate right now.
Because
Um,
what's so interesting is that the liquidation cascades that occur in crypto are ridiculed as
yes,
volatile.
yeah, this
But
is a
the only
volatile asset.
reason, oh, that's what they call it. But the only reason these liquidation cascades have not occurred in modern times in macro finance, the last significant liquidation cascade was 2020. And then before that, the biggest one
2008.
was the GFs and then
Actually, I
2000.
would say 2020 might have been in some ways bigger, but it was. I think they sort of prevented the real big liquidation cascade.
Yeah, we have a lower low compared to '08. So that's the only reason you don't see this kind of volatility in traditional finance is because of systemic intervention. In crypto, it's the volatility is not a bug. This is a
it's
feature of
it's a
economics.
feature. Yes,
You want to
when
flush the bad shit, and that allows a strong foundation and a regrowth
right.
of price of organic pricing.
Exactly, exactly. I'm actually in the middle of reading Manias, Panics, and Crashes, which is book that was originally written by Kindleberger. And it just goes through like everything that we've experienced in crypto is not new. Like from like a financial perspective, like um we I've always said this, our speed running the history of finance on chain, and like it just makes it so that we we see this stuff and we see like these big liquidity cascades and we see the volatility and we go, oh my God, see this is unique to crypto. And it's not it's just that every time that this happens in the traditional financial world, they put in tools to prevent it. In 1987 there was a giant stock market crash where the stock market just dumped in like one day. I forget the percentage. I was gonna pull up a chart of the S&P, but like let's see, that's 2020. Gotta go back. Whoop, whoop. But let's see, oh wait, not nearly far back enough. Here we go.
Oh, it's so tiny.
October 87. But like this thing literally happened over the course of like a day. And at the time, it wasn't so tiny. Like
It was massive. It was structural. The whole system was failing.
boom. Like that is a big candle. And
Hey, look at the moving average.
after that, they put in circuit breakers.
The mean
And
regression.
and
Isn't that
all
isn't
that
that
does
scary?
Yep, it just bounced right off
Dude,
the
it's
moving
just
average there.
it's it's so weird. The whole system is contrived and it's just a mean regression. It was nothing. And bear in mind, if go forward to most recent, if we may, go to
Sure.
08, 20.
So
The
here's
suspicion.
2000. Here's 2000, which is not irrelevant to this discussion either. But here's 08.
08 with a fresh lower low. That's why they were panicking. The whole structure of the system was breaking. But
Yes.
look, all above the 200. I'm pretty sure that's the month. Or the monthly, a monthly 200. So it was more or less mean regression, especially after the bounce.
Yep.
Look at that hit. Look at that trend line hit. I'm pretty sure that's the 100 SMA in the monthly.
Yeah, and you want to know how far back that line goes?
Wow.
Like I think that line might be, hold on. I think I have to put, for this line to actually make sense, I think I have to put it in logarithmic mode. But
The beginning of time.
here's logarithmic mode. And you see that it's just, this goes back to 1929, right? Like, and it's just, we've kind of kept
It's what Raoul talks about.
in
The whole
this
system just
channel.
expands.
We've kept in this channel. But look at where we are positioned at this current moment. And tell me that doesn't look like a scary place to be from a historical perspective.
Bear in mind, the
Uh
whole composition of the S&P changes.
well,
This
that's also a very, very valid point. That we talk about the S&P like it's this monolith, but like they kick companies out. It's more of a big index fund. Um,
exactly.
but
Literally
yeah,
just an ETF.
I mean,
We'll use it as a proxy.
I think we're running up on your time limit there, Captain.
Yeah,
But
it's a Wednesday.
he's a busy man. So, you know, I think we've covered quite a lot here today. I think we talked about the yen. We answered some questions about it. Good day for
That's the
exit.
scary stuff. And we're back in the
Yeah.
saddle too.
Yeah, absolutely. And we'll try to do a few more of these. Things are gonna be a little less hectic, and I think my life for sure shortly. Like so, that'll also help. So, um, yeah. Until next time, don't be exit
Don't
liquidity.
be exit liquidity. Good stuff, Ben.
Yep. Remember to like, subscribe, follow. Peace out.
Peace.